How to read a profit and loss statement and a balance sheet. What's good, y'all? My name is Akila McIntosh. I am a certified QuickBooks Pro advisor um, from my company, Millennial Gems Bookkeeping. Um, and so today, like I said, we're going to talk about how to read a profit and loss sheet and a balance sheet because I'm sure there are a lot of people out there who just don't know how to read one, especially if you're a new business owner or a new entrepreneur. And it's understand that it's very crucial that you'll need these statements for tax season that's actually going to be rolling around. So if you do need a bookkeeper, please feel free to leave a comment or visit the website. It'll be in the description so we can get you started and get whatever you need for tax season. All right, we're not going to waste any time. Let's get right into it. So here, okay. So we'll start off with the profit and loss sheet first. So the profit and loss sheet, this tells you how your business is performing over a specific period of time. And so it's broken down into a few different sections. The first one's going to be your income, or revenue would be the preferred term. Either way, kind of interchangeable, but revenue is like the preferred term. But revenue is just the total money generated from the sales. So in the revenue section, it'll pretty much show you, all the different ways and channels that you were able to bring in sales. So last year, I was selling on Amazon, doing Amazon FBM. I'm sure some of you have heard of it. Maybe some of you haven't, but yes, I did fulfill by merchant, which is essentially, I was doing the shipping and packaging myself. I did not send anything to Amazon's warehouse, but I was reselling products from the store and selling them on Amazon. So that's the first portion of your profit and loss is your revenue. This is just total sales across the board. Your next section, you have your COGS, your cost of goods sold. Now, all this means is this is just directly correlated to anything associated with like labor, making the product, buying the product so that way you can sell it. So, for example, my hat here, right, with my logo, I had to, you know, I bought the hat from somebody. Somebody had to produce the hats, but, I had to pay them to put the logo on the hat. And then if I wanted to sell this hat, that would be considered cost of goods because I had to pay for the hat and then pay for the logo on the hat. And then that's essentially what you would look at as a cost of good. And then if I had like special packaging, then, again, that's another labor cost. All things related to helping you resell the product. If you look at it from the Amazon standpoint, I had to buy the inventory. I had to buy, boxes or like poly mailers, shipping tape. Sometimes if I had to go to the the couriers like the UPS, USPS, I had to pay for the shipping and stuff like that. So those are all, again, cost of goods. Everything related to helping sell the product or related to selling the product. All right, so your next section after your cost of goods is your gross profit. Now, gross profit's very simple. It's not as hard as some people may think it is, but you have your gross profit and you have your net profit or net income, gross income. But your gross profit essentially is just the revenue, the total revenue minus how much it costs you to, produce the things you sold. So revenue minus COGS essentially is your gross profit. So it's not like your take home profit just yet. It's just to see where, kind of just gauge, all right, how much do we make after from total sales and how much it costs us to make all this product, how much do we have after that? That's what gross profit is. So after that, you have your expenses, which essentially is, you know, everything that ties into your business's operation. So your website, that's an expense. The domain is website. The domain is an expense. Um, let's see what else. My MacBook would be, I guess like an expense because I need to use that. Or actually, maybe not. Maybe not your MacBook. Um, but there are certain expenses that tie into helping you having to run the business every day. There's things like any like softwares you have to pay for. Think of those of like as like expenses and stuff like that. So finally, you have your net income. Now, your net income is actually what is kind of like the take home money, or if you want to look at it from the aspect of like your business, kind of like what your businesses is kind of like worth almost. So, or exactly, maybe not so much of how it worth, but like how much it's um has kind of like left after everything has been taken out. So your net profit is your revenue, your cogs, expenses, taxes, anything out that's got to be taken out of, that went in that goes into running a business. You guys notice this stuff on like when you look at like your W2, right? You got like the gross pay, like the total amount you made, and like which is like going to be like your gross pay, and then you have like all like the FICA, the Social Security, Medicare, like all that stuff being taken out, like all the insurances and stuff like that, and then you have like your total take home money. So that is what your net income is. So your net income is all of that minus also the taxes and other things that go along with it, expenses and stuff like that. So your gross profit, just to kind of break down the two of those, gross profit is just revenue and your cogs, where your net profit is both of those revenue, cogs, any other expenses you may have, again, like taxes, and that'll give you your net profit. That'll give you the total amount left for your business. So that's the breakdown of a profit and loss sheet. Again, if you have any questions about anything, feel free to drop it in the comments. Feel free to DM me on my socials if you have any questions. All right, so next we have where am I looking? For our balance sheet, right? So the balance sheet, your balance sheet tells you, make sure I got all of these closed up first so you can see it. All right, I'll bring them back down in a second. So your balance sheet shows you your business's financial health. So the balance sheet is just broken up into three sections: your assets, your liabilities, and the equity, right? So assets, by definition, your assets are anything that your company owns. So when it comes to looking at your balance sheet for your business, you're talking about like any bank accounts, any inventory, any current assets, like anything you bought that you have to use that's like a long term. Um, like if you bought like a building or something like that, or if you bought like a specific like, you know, power tool or generator or something like that, something that's just like it's a long term thing that that's an asset, because you're using it to help, run your business. Um, Something that helps, generate you money. So yes, that's essentially like your assets. Um, then you have your next section, which is your liabilities. So your liabilities, these are things that your company owes to people. So if you have credit cards, obviously, that's money to the credit card companies. So that's liabilities. If you have outstanding invoices for people that you need to pay, any loans, you know, those are liabilities, things that, that cost you money or cost the business money. And then lastly, you have your equity, right? So your equity is almost like your business's net worth. So I know I kind of mentioned that earlier when I was talking about like profit and loss sheet. But with the balance sheet, equity, that's kind of like more so like the closest definition that kind of relates with equity. Equity is more so like the net worth. So kind of just how much the business is actually worth. How much do people have like invested? When you hear like equity, like, you're always wondering like how much money is my investment worth? Because people are always looking for an ROI, which is a return on investment. But essentially, yes, your equity is always just going to be, like your investors, any money you like invest into your business, um, anything you take out, like your owner's draws. So that's all like your equity and stuff like that. Any money you put into the business um, will be your equity. And so if you don't know the golden rule with accounting or bookkeeping, um, it's got to be balanced. Your balance sheet, it's called a balance sheet because it needs to be balanced on both sides. Your assets equals your liabilities plus equity. So as you guys can see here, total liabilities and equity, you clearly see that it equals the total assets. So it needs to be level at all times, or it's going to be level at all times. So liabilities plus equity equals assets. So that's essentially kind of the breakdown of a balance sheet, how you read a balance sheet, how you read a profit and loss sheets. It can be a little bit more complex. The more kind of things you have involved with like your chart of accounts, but yeah, this is pretty much like the breakdown. This is how you really kind of understand like the value of like a company. For those of y'all who do like stocks and stuff like that, you really want to kind of look at like the balance sheet of like the company so you can kind of see, how much money they're spending, how much money they're bringing in. Like I said, the balance sheet shows you, the financial health of a business, where like the profit and loss sheet is going to show you kind of like the performance of it. So that's kind of the difference between the two, and that's how you read it. So that wraps up this one. Feel free to subscribe to the channel, hit that like button, turn on those post notifications. If you are listening to this on Apple Podcasts or Spotify, feel free to hit that follow button, leave a 5-star review. If you do need a bookkeeper, if you are a brand new entrepreneur, if you're a seasoned entrepreneur, business owner, and you're just looking for a new bookkeeper or need a bookkeeper, I'll leave a link in my bio in description for you to schedule a consultation so that way we can get the ball rolling for 2025, because tax season is approaching. So you want to make sure that you got your accounts reconciled, so that way you can take advantage of tax deductions. Cool. I'm gonna see y'all in the next one.